Morning, welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston, and today we have quite a big day in terms of economic data. Bank of England will release its interest rate decision today, which is quite key going into the third quarter. I don't expect anything to be done. But before we go, I concentrate on sterling and a few other bits and pieces, or just overview of yesterday. Data, once again, I'll keep going on about it. Doesn't matter, flat. Euro dollar had a spike to 119. That was basically all the shorts getting stopped out. We're now retraced. We retraced very, very quickly. If you look at gold as well, we had a spike down. These are just all short-term traders getting basically caught out by the algos and the systems out there, because there's not really that much volatility going on at the moment. I mean, if you look at the VIX, it's trading at 10. It's still very, 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 very low in terms of volatility for this year. It's at its lowest nearly. People are trying to get in and out for very, very small amounts because there's nothing going on. And when algos and systems know where people's stop losses are, they do. Don't think they don't. They will put the pressure on, and therefore that's why you get these stops up and then sudden retracements, and that's what happened yesterday in euro dollar. Anyway, let's put euro dollar aside. I'm quite bored of talking about that cross, to be honest, at the moment, because it's just so saturated at the moment, and it just does what it wants to do. It's going up. We know it's going up. Let's just let it ride that tide for the moment. But let's concentrate on sterling today and how the Bank of England are going to approach their interest rate decision. Now, 40% apparently say that there will be a hike. Currently, it's 0.25%, and they say there'll be a hike. I don't know where these people live or where these people think that there's going to be some sort of hike because of Carney's hawkish rhetoric they had a couple of months ago. There's no way the Bank of England can hike rates. There's no way. Now, let's just bring the property market in the UK as one example, and London, because London basically is the UK. I mean, I'm being slightly arrogant here, but London is the vast majority of how the UK operates. London house prices, you will not find anything for less than £300,000 to get on the property market. And this is where interest rates are at the bottom. They could go lower, but they're pretty low, right? Everyone is borrowing money over and above what they can actually maintain. If the Bank of England even adds a quarter or even a quarter of a quarter to the interest rate, this will knock into the mortgage market and therefore affect all those people who have saved hard and tried to put their money and bought into an inflated property market. There's no way they can raise rates currently unless they want a housing collapse. Now, it won't happen immediately, but there will be a knock-on effect. People will effectively go into negative equity because they won't, their properties will not be worth what they paid for it, and they certainly won't be able to afford the mortgage repayments. So in the grander scope of things, that is the reason why I have my Mr. Grumpy mug today. It's just ridiculous. Anyone says they can raise rates. It's not going to happen. It shouldn't happen for the foreseeable future. And if it does, we're in for an almighty property collapse. So, if Bank of England raised today, anyone who has cash, keep it ready at the hand, because you're going to be able to pick up property in the next 6 to 12 months at a very, very cheap, lower level than it is now, maybe 25 to 30%. That's my figure on this. Anyway, sterling aside, I've had my Mr. Grumpy mug today on that. Let's look at something else which is quite interesting, all I find interesting, and is gold. Whether you're buying physical or whether you're trading a spot margin with us, once again, it's in this lovely pattern here. Had a small pullback yesterday, but nothing out of the ordinary. What we have to take into consideration is patterns and seasonal patterns, right? So we have to look at how gold trades monthly over 40, 50 years. So if we take it, I'm just reading an article, funnily enough, and if we take it since 1975, March and followed by April have been the worst months for gold in the last since 1975. September has been the best month for gold over 41 years. Right. So what does that mean? That means people, investors, portfolio managers will start to add to their portfolio or their asset allocation little bits of gold in the months running up to September, because September, over the last 41 years, has been predominantly one of the best months for gold. So in August, you should, in theory, start to see an uptake in gold as portfolio managers add to it, based on the probability and the analysis over the last 41 years that gold has gone up, September has been one of the best months. So if you are a betting man, you therefore add to your portfolio gold spot at this level or levels below, going into September, because for the last 41 years we are told that September has been the best month in gold. Now you can quite easily look at our monthly chart, weekly chart on here. Here's a monthly one, and you can do your own analysis and find out what months have been predominantly better for gold and what months have been predominantly weaker for gold. And once again, we're looking at this sideways pattern. We might get a pullback down to this area here, but then, judging by probability and the data, September for the last 41 years has been the best month for gold. So we're also looking at the 1290, which I've said over the last 3 or 4 videos is an option. You have to think that if you're a portfolio manager, in the August month when it's slightly quiet, you'll start to add small bits of gold to your portfolio, just on the basis that you should technically and historically have a move to the upside in September. So this is something you should keep in your war chest and something you should understand. But gold, seasonality, buying, and gold, just looking at the pattern formation and historically how it trades, September should be a good month. Therefore, in August you start to allocate to this product. So I am a gold bull at the moment, and with the weakened dollar, I continue to be a gold bull. So for the rest of today, once again, it's the Bank of England, and we have some ISM non-factoring rubbish in the US later on. Bank of England, see how that pans out. Sterling, just for the weakened dollar and the way it is, if we go back to the chart here, is in this trench, which I after we had Brexit, which we talked about 4 videos ago. We're now in the middle of that, and this is where we're looking to consolidate. So let's see how the Bank of England pans out later on. I'm voting unanimously for no rate hike, and if they do, they're idiots, and I'm a gold bull. So from me, we'll speak tomorrow, and we'll go over some bits and pieces for non-farm payrolls, but have a good trading day, and from me in the front lines, we'll speak tomorrow.